Hello everyone, welcome back to Bizreport. My name's Nate, and today we're diving deep into the topic that is absolutely critical for anyone looking to plant their business roots in the Golden State. We're talking about California LLC costs, breaking down every single fee, tax, and hidden expense that you need to know. And by the way, today's content was written by Eric Pham, the founder of Bizreport. So if you're thinking about starting a business in the United States, California is a market that always dominates the conversation. Forming an LLC here gives you direct access to a massive consumer economy, world-class infrastructure, and an ecosystem built around innovation and entrepreneurship. It sounds like the perfect launchpad, right? But here's the catch. Before you become fully operational, you have to navigate a compliance minefield of state filings and, more importantly, high ongoing maintenance costs. If you don't fully understand how California structures these expenses, you aren't just risking your initial budget, you're putting your entire corporate standing at risk. Missing a single deadline can cost your company's good standing status, prompt severe operational restrictions, and ending up doubling what you owe in late penalties just because a random date slipped past your calendar. So in this episode, we are doing a complete line-by-line breakdown of California LLC expenses. And to keep things highly practical, we've broken down this analysis down into two distinct parts. The formation phase, what it takes to legally birth your company, and the reoccurring phase, the fees you must pay to keep the doors open year after year. And we've mapped this out clearly so it's easy to follow. And by the end of our conversation, you'll know exactly what to expect so you can budget accurately and confidently. So grab a notebook and let's talk about money. So let's start with the first phase, getting your business off the ground. Many people assume the very first step is just jumping straight into state paperwork, but that is actually a mistake that can break your timeline. In the real world, your formation process follows a strict chronological order, and it starts with your identity. So before you touch a single official form, your absolute starting point is choosing your official business name. Financially, the great news here is that this step costs you $0. California does not require you to pay a formal name reservation fee prior to launching. However, you cannot simply select any name on a whim. You must be completely unique and legally distinguishable from every other corporate entity currently active on the state's registry. So if you submit an application with a name that is already taken, the state will instantly reject your paperwork. To protect your time and ensure your name costs nothing, you should always run your top ideas through the free California Business Entities Search tool on the Secretary of State's website before moving forward. Once your name is cleared, your second step is to officially appoint a registered agent. This is a strict statutory requirement under California law. A registered agent is a specific individual or commercial service designated to receive official tax notices, legal correspondences, and service of process in the event your business faces a lawsuit. Your approach to this choice will dictate your budget, and it splits into two different directions. The first option is the free route. You can technically appoint yourself a business partner or a trusted family member to act as the agent for $0. While this looks like an easy way to save money, it comes with a rigid, real-world trade-off. To legally serve as your own agent, you must be a resident of California, maintain a physical street address, means P.O. boxes are strictly prohibited, and you must remain physically available at that location during standard 9 to 5 business hours. If you miss a critical state notice because you are out of town or running an errand, the legal consequences can be devastating. The much bigger concern here, however, is personal privacy. Under California state law, your registered agent's name and physical address becomes a permanent matter of public record. If you use your personal home address, it will be indexed on public databases, exposing your personal information to hackers, solicitors, and to the public. This exposure is precisely why many modern business owners choose the second option, hiring professional commercial registered agent services. This route typically averages between $150 and $199 per year. By outsourcing this role, the commercial service puts their corporate office address on the public registry instead of yours. They shield your privacy, handle all official government correspondence, and ensure you remain fully compliant while keeping your personal home address compliant off the public record. Now that you have your name cleared and your registered agent selected, you are finally ready for step 3. Filing your articles of organization. This is the official document that you file with California's Secretary of State, and it acts as the legal birth certificate of your company because it's officially binding your name, address, and agent information together. In terms of out-of-pocket costs, the state filing fee for your articles of organization is a one-time payment of $70. Once the state approves this document and processes your payment, your LLC is officially recognized as a separate legal business entity. However, please remember that paying this $70 does not mean that you are fully ready to open your doors for business. It just means your entity exists on paper. If you handle this filing standard, the state's official BizFile online portal typically approves the application within 2 to 3 business days. But if you are facing a strict deadline and need your corporate structure set up immediately, you can pay the extra for expedited services. If you require guaranteed approval within 24 hours, that falls under their Class C expedited service, and add-ons cost an extra $350 to your total. If you need same-day processing, known as Class B service, you must submit the paperwork via their portal by 9:30 a.m. to receive an approval by 4 p.m. that afternoon, and that will run you an additional $750. For the vast majority of startups, the standard $70 filing fee and a few days of patience is by far the smartest, most budget-friendly route. And keep in mind, California now mandates that all new business entities register entirely online. You can no longer submit these forms through the mail. Once the state approves your entity, step 4 takes you inside your company to create your operating agreement. This is a purely internal contract that outlines the complete ownership structure, member responsibilities, voting rights, and how financial profits and losses are distributed. Now, because this is an internal document, you do not file it with California Secretary of State and do not pay a government filing fee for it. And that is exactly why so many founders skip this step, simply because the state does not legally mandate it to recognize your LLC. But missing this document is a massive mistake. An operating agreement is the primary legal mechanism that reinforces your personal liability protection. It serves as the definitive proof to courts and banks that your LLC is operating as a legitimate, separate legal entity, which is what keeps your personal money safe from business debts or lawsuits. The great news is that getting one doesn't need to cost you anything. You can actually use our free template, which we've linked right here in the description of the episode for you to download. It allows you to confidently draft one yourself. Once your articles of organization are approved, you can immediately move to step 5, acquiring your employment identification number, or EIN. An EIN is a unique 9-digit number issued by the Internal Revenue Service, the IRS. Think of it as a social security number specifically for your business entity. The fee to get this is exactly $0. How you acquire your EIN depends entirely on your citizenship status. If you are a U.S. citizen or resident with an existing social security number or individual taxpayer identification number, we highly recommend applying online. You simply fill out the form on the IRS website and your EIN is issued immediately in about 15 minutes. However, if you are an international founder without a social security number or ITIN, you cannot use the online portal. Instead, you must fill out Form SS4, submit it to the IRS. If you fax the form, it takes about 4 business days to get your number. If you send it by traditional mail, be prepared to wait around 4 weeks plus mailing time. Now, who actually needs an EIN? Well, if you have a multi-member LLC, you are legally required to get one. If you have a single-member LLC, you technically have the option to use your personal social security number for taxes, but you'll still certainly want an EIN because most major banks require it to open a business bank account, and you'll need it to file federal business taxes or certain state-level documents. For international founders, having an EIN is an absolute must, regardless of your structure. Now we're entering a territory where the numbers aren't quite as set in stone. When it comes to obtaining your professional business license and permits, there is one flat fee. The most important thing to understand about California is that the state does not require a general statewide business license. Instead, specific licensing requires and total costs are going to depend entirely on your business location and your industry. For example, if you're operating a specialized field like a barbershop, a nail salon, an engineering firm, or healthcare, you'll need an occupational or professional license issued by that specific state board. On the location side, individual cities and counties in California usually require their own local general business licenses just for the privilege of operating in their jurisdiction. To figure out exactly what permits apply to your unique commercial footprint, the state offers a great official search tool called CalGold. You just input your city and your business type, and it generates a complete list of required local, state, and federal permits, along with the contact info for those specific agencies. And the final step in your formation phase is setting up your sales tax license, which in California is officially called a seller's permit. This is managed at the state level by the California Department of Tax and Fee Administration, or CDTFA. Registration is strictly mandatory if your LLC plans to sell or lease physical goods or provide certain taxable services within the state. Applying for a seller's permit costs exactly $0 in state fees. All right, your LLC is completely set up, your permits are active, and your formation phase is complete. Now let's move on to the recurring phase, the ongoing maintenance fees and taxes you must budget for to keep your LLC legal and active in the state of California. The very first recurring requirement on your calendar is the Statement of Information. This form keeps the state updated on who owns the company, who are the managers, and where are the offices located. A common trap here is forgetting that this statement must actually be filed 2 times per year early on. Your very first filing is the initial Statement of Information, and it's due strictly within 90 days of your LLC's official formation date. After that initial filing is out of the way, it becomes a biennial requirement, meaning you file a recurring report every 2 years during your LLC's anniversary month. The filing fee is just $20 and must be completed online through the state's portal. If you miss your 90-day window or your 2-year deadline, the state will instantly strip away your good standing and pass your account to the Franchise Tax Board, which will slap your business with an automatic, non-negotiable $250 late penalty fee. Now we've arrived at the absolute heaviest part of the breakdown, the California annual franchise tax. This is the mandatory flat fee that every LLC must pay for the privilege to exist and doing business in the state, regardless of whether you make $1 million or $0. The cost of this is a flat $800 per year. When is it due? Your very first $800 payment is due by the 15th day of the 4th month after your LLC is initially approved by the state. So if you form your LLC on June 1st, your first $800 tax voucher must be paid to the Franchise Tax Board by September 15th of that same year. Every year after that, your reoccurring $800 payment is due on April 15th. This timeline creates a dangerous back-to-back nightmare scenario if you form your business late in the calendar year, specifically between October and December. So let's look at how this trap works. Imagine you form your LLC on November 1st. And because the state measures tax year by the calendar, November and December count as your entire first tax year. Your first $800 payment is due within 4 months, making the deadline February 15th of the next year. However, your second tax year begins immediately on January 1st. And under state rules, that second year's reoccurring $800 tax is due on April 15th of the exact same year. Think about that cash flow. You're forced to pay $1,600 in franchise taxes in the span of just 2 months. If you are planning a business launch late in the year and don't absolutely need to launch immediately, it's a highly strategic wait until January 1st to file your articles of organization, completely avoiding the rapid double tax hit. The $800 franchise tax is your baseline minimum cost just to exist. But what happens if your business is highly successful and starts generating real volume? California hits you with a completely separate corporate layer known as the estimated LLC LLC fee. Unlike the franchise tax, this fee is progressive and is calculated based on your company's gross receipts, meaning your total top-line revenue before you deduct any operating expenses or losses. If your gross revenue crosses the $250,000 mark, you fall into a tiered bracket system. So let's review how those brackets actually look. Gross income from $0 to $249,999 results in a zero fee. You only pay the base franchise tax. Gross income from $250,000 to $499,999 adds an extra fee of $900. Gross income from $500,000 to $999,990 adds on an extra fee of $2,500. Gross income from $1 million to just under $5 million adds on an extra fee of $6,000. And gross income from $5 million or more tops out at the maximum fee of $11,790. Now here's the cautionary part that catches owners in a trap. As the name states, this is an estimated fee, meaning it is your explicit responsibility as the business owner to accurately forecast your annual revenue and pay these fees by the 15th day of the 6th month of your current tax year, which is June 5th for the standard businesses. If you underestimate your income or fail to pay the correct bracket fee by the June deadline or fail to accurately report the numbers on your state returns, the California Tax Board will hit your LLC with an automatic mandatory 10% underpayment penalty. When your top line revenue starts approaching that $250,000 mark, careful accounting is no longer optional. It's a financial shield. Now, beyond the franchise tax and estimated fees, we need to talk about your actual tax return filings. Every single California LLC is legally mandated to file California Form 568, which is the limited liability company return of income. This must be filed by April 15th each year, and it is how you officially report your gross receipts and track your state obligations to the Franchise Tax Board. Alongside your return of income taxes, you must also be required to pay several other taxes when operating your business. Depending on your specific layout, your industry, and how your LLC is classified for tax purpose, this could include things like federal and state income taxes, self-employment taxes, or sales and use tax. If you have a team, you'll have to manage payroll taxes. And if the LLC owns real estate, property taxes come into play. And because these total tax obligations are completely based on your unique business activity, it is impossible to provide a one-size-fits-all estimate of how much you owe here. This is why working with a professional accountant is your best financial shield to ensure you stay fully compliant. So let's pull all these moving parts together. What does a California LLC really cost when you look at the total estimation? When you add up the baseline essentials, the $70 filing fee of your articles of organization, the $20 initial statement of information, and the mandatory first year $800 franchise tax, your total minimum setup costs come out to exactly $890 for the first year. Now, keep in mind, this $890 base can easily increase depending on your specific business choices. For instance, your total budget will go up if you decide to hire a professional registered agent service to protect your personal privacy, if your specific business industry requires local business licenses, or if you choose to hire someone to write your customized operating agreement for you. Navigating this corporate terrain requires a highly organized approach to compliance. If you want to eliminate the administrative stress of handling all the state paperwork by yourself, utilizing a professional formation service can be an incredible smart move. A fantastic option to look into is Zen Business. They keep the entire process completely transparent and offer a starter plan with a $0 service fee, meaning you only pay the exact baseline state filing costs. It's a highly affordable and stress-free path to ensure your portal documents are completely flawless while you focus entirely on scaling your new venture. By organizing your compliance calendar, estimating your taxes accurately, and budgeting for those local permits, you can fully capitalize on California's massive economy without being blindsided by hidden costs. Thank you for listening to this deep dive episode. If you found these business insights helpful, feel free to leave a review and subscribe to Bizreport for more comprehensive guides. Good luck with your California LLC, and we'll catch you next time.